Today, I want to address two important questions on the minds of investors. Why is the market concerned about a trade war? And how will DOGE layoffs affect the labor market? Let's start with the trade war. Trade tensions between major economies can create significant market uncertainty and volatility, which naturally concerns many investors. Let me share some key perspectives on this topic. The recent implementation of new tariffs, including a 25% tariff on Canadian and Mexican goods and increased duties on Chinese imports, has created immediate market reactions, with the S&P 500 experience its worst daily decline this year. While tariffs are often used as negotiating tactics for broader policy objectives, they can create uncertainty in global markets and impact business confidence, as evidenced by Canada and Mexico's preparation of retaliatory measures. Recent market behavior has demonstrated the value of diversification, with bonds helping to offset stock market volatility during periods of trade-related uncertainty. This chart illustrates how markets have historically responded to various periods of uncertainty, including trade tensions, and why maintaining perspective during volatile periods is crucial. History shows that while markets may react sharply to trade headlines in the short term, they tend to recover and advance over longer periods. Next, let's turn to DOGE. Government workforce reductions, like those being implemented, could have ripple effects beyond just the federal workforce itself. Understanding these potential impacts is important for evaluating the overall health of the labor market and economy. Here are some key factors to consider. Federal government employment declined by 10,000 jobs in February 2025. Which appears to be just the beginning of DOGE-related cuts that followed 75,000 federal employee buyouts. While federal workers represent less than 2% of the total workforce, which is about 3 million employees, each federal position is connected to approximately 2 contract jobs that could be affected, potentially extending impacts into the private sector. Initial jobless claims for federal workers increased to 1,600 for the week ended February 22, 2025, indicating the cuts are already showing up in the unemployment data. The broader labor market currently has 7.6 million job openings, which could potentially absorb these displaced workers, though actual reemployment will depend on hiring trends in coming months. This chart shows how the job market has grown. The federal government has been a significant contributor to recent job growth, adding 198,000 jobs in the past 6 months and accounting for 11.7% of job gains from November to December. This highlights why these cuts could be meaningful to overall employment statistics. While these workforce reductions may create short-term disruptions for affected workers, the overall impact on the economy will depend on both the pace of cuts and whether private sector job creation remains strong enough to offset these losses over time.